Hello everyone, welcome back to my channel. So this video marks the beginning of the week number 93 in this road to 100k realized return challenge, and the markets again, unlike last week, but again in with fears that the war in Iran may resume soon, and that is the reason why, according to this news piece, most of the markets are coming down and oil price again are on the rise. And given the negative correlation that oil prices have been displaying relative to the rest of the market, this has been, of course, a development that, again, has persisted up to this day. But yeah, this is what we have to work with right now. We have already did all of the trades that we could do, given the buying power that we had available. Even though, and for example, in the case of the XLV, we could have either go for 0DT options expiring today, of course, obviously, or expiring on Wednesday, or expiring on Friday. And given the economic calendar that we will have this week, here there's nothing really relevant or that much relevant all the way up until Wednesday, when the ADP employment comes up. So this is for the private employment, and then the full jobs report comes down on Friday. So given this situation, and given that the main highlight of the week will be this exact jobs report, it makes sense to only use options that expire on Friday to capitalize on the increased volatility that would be reflected in the options because of this. So although I noticed that the premiums of these puts are actually quite distant from the premiums that are being being reflected in the calls. And when the value of the calls is pretty much oversized relative to the puts, that means that the market is not really pricing any sort of risk later down the road, which is, yeah, it's a bit strange given the circumstances that we have at this point, but yeah, it is what it is. Even so, let's see what it is. So looking here, so looking here at our chart and bring here to 0. These are all of the trades that we did, and if we look here at our returns, you can see that some of them are quite good, but a few other ones, especially in more volatile sectors such as here the biotech, the premiums were not that big. Of course, we still went for very conservative strikes. On average, we went for 87%. In the case of the XBI is 90%, but still, I would expect that the premiums would be a little bit higher. These returns here around 20-30% are not that significant, but especially, for example, here, if you pay attention here, for a 15 delta put on a quite volatile underlying, which is copper. This is a copper index. It's less volatile than the investing directly in copper, but still it will only provide us a return of around 35%. So the put premiums are a bit reduced relative to what should have been, and given the current price of the SILJ here, which is around 28.76, it does not make any sense to sell any calls on these shares, because with a strike price of 33, which is our cost basis, this would give us a meager premium, probably around 3 cents a share, which is basically nothing. I would rather wait and see if the stock recovers somehow, and then if it recovers, we will be able to sell calls with a higher premium. But yeah, basically we went this time around for 4 contracts on most of these underlying, so 4 contracts on the RKK. Initially we went for 4 on copper, but then with the remaining buying power we sold 3 more contracts, so we have 7. GDX again 4, GDXJ 4 again, regional banks 4. We also sold 4 puts on SILJ to bring down the cost basis of our holdings. SLV again 4 contracts, the oil fund 4 contracts, and also here XPI we also went again for 4 contracts, and also for the ETF on energy, and also consumer staples and consumer discretionary again 4 contracts. So I think this makes sense given the amount of ETFs that we have available for us. I did not went for this one, the EAU, and the reason for that is there must be something going on here, because now it's a bit better, but when at the time I was placing the trades, this option chain was very, very, very shallow, and I decided not to pursue it because I would imagine that if the option chain would remain that shallow, that it would be an increased risk to sell puts on this, because if the price falls down significantly, our cost basis will be beyond reach, and so we would not be able to sell any calls unless the stock recovers somewhat. And so this was not really what I was looking for, so I decided to skip this. And we already have some exposure on gold with the GDX and the GDXJ, so yeah, so be it. And with this particular set of puts and calls that we sold, currently we have a little bit over $2,500 already collected. Again, whether we keep this or not, for sure we won't keep all this amount, because some of the puts for sure will be called back, even probably some calls. For example, this call on XPI was sold above the cost basis of 130.50, so we are looking here at the potential $300 in capital gains. Here the GDX we sold at cost, so we would break even on this, and the XLF also, again, because of the price we sold the calls, we are looking at a potential $150 capital gain if it materializes. But again, this is pretty much it. It's going to be a slow burn week towards the end of the week with the jobs report. In terms of earnings, corporate earnings, 6 of the 7 magnificent 7 technology companies have already reported. Nvidia will report its earnings on the 21st of May, so we are still quite some way away from those earnings. But this time around there are only a few big companies that will report today. There are some tech companies, but I think it's the name is Palantir. That's the name. Yeah, this is one of those that will report today, but we'll see. Yeah, they are already going up 2%, of course, in anticipation of earnings. So yeah, this is it so far. Feel free to leave your comments in the comment section down below. I'm also available on LinkedIn in case you need to ask me any questions. And as always, feel free to like the video and subscribe to the channel, and we will reconvene next weekend to close out the week number 93 in this challenge. And yeah, I'll see you there.